Welcome back to Stocklabs Market Recaps. We're just about through January now. Wrapped up the week on the 27th, and it was a solid week for markets. Kind of went how we were expecting coming into the week. It was up early, and then we got a big dip. I mean, not you know we got a 1 day dip or 2 day dip or something in the middle of the week around Microsoft earnings, which were less than stellar, but that ended up being the weekly low, uh, and everything got bought Thursday and Friday. Closed around the weekly highs. Came off a little bit just at the tail end of the session, but um, for the most part, Bulls were basically in control of the tape, at least to close out the week. As far as the performances of the indices, we've got the Qs outperforming, up 4.8%. That's basically what we're expecting coming in. S&P was up 2.5, IWM up 2.5, Dow up less than 2. So you've sort of seen this year so far to start. There's been basically rotation back into all the stuff that was completely blown out in 2022. So you're seeing like big bounces in these Qs, in the Qs, and also like those type of stock, the beaten down tech stocks that were down like 60, 70, 80% off highs. They're up 40, 50, 60% year to date already, but it's still like they're still more than halfway off their 21 highs. So it's kind of like you have these huge percentage swings, but those stocks are still, they're still way beaten down. The Qs are still down, a pretty good amount off the all time highs. Crude oil down 2.8%. This crude trade has been basically dead. Bonds have really stabilized in the last couple months. They edged out a small gain this week. Um, we got some economic data this week, but I don't think there were any surprises. So inflation was more or less in line. Consumer, spending and income data was more or less in line. I don't think there was anything like crazy. So, as long as if we get another print where the inflation starts ticking up again and looks like that trend is resuming, the bond market is going to probably just collapse, and that won't be good for all of this stuff that's trying so hard to bounce. But for now, everything is like smooth sailing. Our mega cap stocks, you can probably imagine they did pretty well. I know everybody was watching Tesla this week because it's up like okay, it's up 33% this week. I think up 60 or 65% year to date already. We're almost done January. So yeah, Tesla having a great year. Yeah, got smoked originally, like so many other names similar to that one, but yeah, the numbers look good now. So um, Nvidia was up 14%. Semiconductor trade has kind of, I don't know if it's cooled off or what. Intel had earnings on, I think Thursday, which it looks like, from a name that used to be like the semiconductor stock that you had to own, for years, it's like Intel, just the stock can't do anything. I don't think it really matters what that company does. Like, nobody wants to buy that stock. It's somewhere like I don't know what it's like, $25. It was probably $25 in like the 90s or early 2000s. I don't know. Apple up 6%. Okay, big week for Apple. Netflix up 5. Netflix had been leading pretty hard off the lows, like, you know, last last many weeks. So it's kind of fallen down to the middle of the pack. I mean, granted, the top ones are doing numbers like this. So Amazon up 5%, Microsoft up 3 for the week, despite kind of blowing out on earnings. I mean, they, like I said, they sort of missed on their stuff. The CFO was not too rosy about how 2023 is going to look, but nobody cared, when the market is sort of rotating into that sector. It's like the earnings are kind of immaterial because people want tech stocks, and this is a tech stock, so it doesn't matter what they said. It's just it's going to get bought. So Google up 1.4, not that great of a week for Google. I mean, considering what the Nasdaq did, Nasdaq was up almost 5%, but we'll see how some of these go with earnings season and everything. Actually forget who's still now. I think we're probably waiting on Facebook and Google and Amazon at least. Apple, I forget. I don't think Apple reported yet, but so we'll see. But solid showing this week, up almost 10% as a collective. And on our industries, we've got pretty solid breadth across the board. I mean, everything green, all sectors green is, generally you're getting that in sort of environments where everything was beaten down really hard and then everything starts getting bought back. So there's not like, I mean, there is some differentiation here between the sectors. Tech is obviously leading. Industrials are doing okay. Services are doing okay. Basic materials lagging. Talked about this before, that I don't think you're going to see much out of this materials sector as a whole. Financials kind of lagging as well. They're not really involved in the story about just buying back all the beaten down stuff from last year. I mean, banks are off their highs for sure, and they do have exposure if if the recession risk starts getting more priced in again, like it was before. I mean, that has sort of come off the table in the last couple of weeks. Healthcare, flattish. I mean, this tends to be, aside from the biotech side of it, the healthcare side tends to be a little, the healthcare space tends to be a little bit safer. So when you're seeing like risk on tech take off, then healthcare usually will lag like this. And utilities up some. I mean, like I said, pretty benign week for bonds. So bond proxies, they work. They work as well. Leadership wise, okay, EVs were second highest. I mean, obviously Tesla, all the other ones in there too. I think Lucid it just completely blew out all the shorts on Friday. And then all the other lower tier EV companies were running just as well. We've got a semiconductor sector leading on here, but then the rest is kind of like, there's not much of a theme. They're sort of like one-off things. I mean, we've got apparel stores, okay, internet information providers. This, I think, I don't know what's in here. This sounds like, this is, yeah, this is like some speculative tech. I see like content companies and whatever. Okay, so let me go back to weekly, and that's about it. I mean, there's not actually a lot of sectors that are up 5% on a median basis. 1, 2, 3, 4, 5. I mean, there's like, I don't know, 15 sectors on here, less, 12 something. So the gains were sort of concentrated. A lot of the big tech stuff, pulled ripped the Nasdaq higher. S&P hung in there or whatever. On the other side though, there's not really anything on the downside. So it's not like there were any sectors of the market really getting liquidated that hard. I mean, gold is silver are not widely followed, but there are like some hardcore people that follow these. I mean, they didn't have a great week. Copper was down. That's about it. I mean, okay, airlines also down. There's not much to get out of here from the downside. I mean, yeah, as you can see, out of like all these pages, there's 23, 22 sectors that are even down. We've got two that are completely flat, and then the rest are all up. So I mean, solid week for breadth, especially amongst in here. Like if you go into the tech subsectors, the breadth is probably just pretty good. Everything, just about everything green, all but one. And this is, yeah. So, okay. If we go to check the breadth by market cap, just to move along, that should also be pretty good. I mean, let's see, week to date. Okay, we got 3% on 1 to 5 billion. We've got 5 to 10 billion, also up 3%, and 10 to 50 billion, up 2.8. So actually, these are sort of the 1 to 5 and 5 to 10. I mean, they outperformed the IWM. IWM was up, what, 2.5, and those were up 3, sort of collectively. We got 1.6 on 50 to 100 billion. It's a little bit soft, and 100 billion plus up 1.72%. It's also a little bit soft. I mean, like we said, NASDAQ was up almost 5%. S&P was up 2.5. So really, all the lift, not all, but majority of the lifting was done by those, that small group of gigantic tech companies. Which, I mean, if you're in them, then it's great. But for the rest of the market, it's not as exciting without a little bit more participation. I mean, it was still a good week breadth wise, but um, when the gains are so lopsided in like one handful of stocks, it's sort of skews these things. But on the small stuff, it was pretty good. Like 3%, anywhere from 1 to 10 billion cap range. I mean, that outperformed the IWM. Was up 2.5. So I mean, there was some pretty good activity on the extra small stuff, but in the mega caps and all of that, the only ones that were really consistently doing pretty well this week were those tech ones that had been destroyed before. As far as this week on intelligence, let's see what we have. Okay, SARK. This is SARK. This is short arc, some kind of interest rate thing, and PayPal Bear ETF. So not much to go on here. I mean, I'm actually going to kind of ignore this and check the downside and see what on here. MSOX. I actually don't know what this is. This looks like, I mean, it's supposed to be down like 13% this week. I mean, it looks like something illiquid, but we can look that up later. And big banks inverse is bearish. So bullish big banks this week. Bull Mexico is bearish. So bearish Mexico this week for any people trading that market. Cotton bearish. Okay, Tesla. Okay, Tesla should take a breather this week, apparently. After 33% up week, kind of understandable. SRTY bearish. So bullish the Russell, and QID bearish. NASDAQ is bearish. So bullish NASDAQ again. And I'm just going to ignore that one. So, I mean, actually, this mix is not really like that. It's not really giving like that clear of a picture. I mean, we are, obviously seeing a pullback in Tesla is, everyone is sort of expecting that. But the rest, I mean, on the index front, I don't know if you have anything to go on. I mean, we got another overbought signal to close on Friday. These have sort of been, this is like a pretty big cluster now of these overboughts in 2023. I mean, if this turns out to be sort of another time that the high of the years in the first month, it's going to be a catastrophe uh, for a lot of traders. I mean, last time we saw sort of this sort of thing was, okay, we got like in January, February, and 21 at the tail end, we got a cluster of overboughts that ended up being like the kind of high for a while, especially in, I mean, the index has made new highs, but the market, like stocks, were falling apart all this year. Um, and right now, we've got sort of like these overboughts clustering up here. Last time we had an oversold was way down here. I mean, kind of want to see some mean reversion at some point. But right now, I mean, market has looked decent. Market has looked decent to start the year. You know, you have a few up weeks. Everyone starts feeling good, and it just snowballs. You pick up a little bit of momentum. I mean, the rally has more or less been uninterrupted. Fed's been in its quiet period for a little while. For last week or 2 weeks or something. So there haven't been any surprises coming out of them. We'll have the FOMC meeting where they're going to raise 25 bips, at least 25 bips, and then we'll see what Jerome says about what the future outlook looks like. I think expectations now are that Fed will raise in February and either March or April, 25 bips each, and then be done. I would expect that Jerome is going to try to adjust those expectations to something a little more flexible for himself. So we'll see. I mean, pretty good week. This coming week should be. I mean, I actually would expect like some back testing like early in the week that gets bought ahead of the FOMC meeting, and then after the FOMC meeting, there tends to be like a decent amount of volatility before direction resolves. So yeah, I mean, can ride the existing trends for the year, and yeah, it's been pretty good. January, it's been pretty good. January, everything sort of resets in February. Because it's a new month that people have to make money in. So we'll see. But right now, yeah, we're all good. So let's keep it up, and we'll talk to you next week. Bye.